Are you looking to take your personal finances to the next level? Well, you're in the right place. Welcome to the Monday Money Tip Podcast, presented by I Was Broke, Now I'm Not, with your host, Joseph Sangle.
Welcome to the Monday Money Tip Podcast, presented by I Was Broke, Now I'm Not. My name is Joseph Sangle, fired up to help you every single Monday with the right now relevant set of information to help you make progress in your money journey each and every week. And this is episode number
146.
And that is the voice of Megan Hibbard, my co-host. And we are fired up. It's Monday. It's April 19th of 2021. Can you believe it?
I can't.
Tax day is come and went.
It has
gone.
I thought you said it's coming. I was like,
No, it's gone.
I'm pretty sure it already happened. Yeah.
Happened 4 days ago.
Came and went.
And now we are going to talk about maybe something that's less exciting to talk about than tax time.
Who
So
knew
tell everybody.
it was possible?
That's quite an intro. I'm sure everybody's going to tune out now, but tell them what we're going to talk about today.
Yeah. So today we're talking about life insurance. So our question is, I'm 36 with a husband and 2 children, ages 5 and 8. I'm a stay-at-home mom. Do I need life insurance?
Well, that's a good question. So we're going to answer that. And so today is the life insurance. You're going to die, and so am I. It kind of rhymes.
Exciting.
It's pick me up on a Monday. I've done detailed research. My Purdue education tells me that,
There you go.
Short of Jesus come back in our lifetime, and even so, Lord Jesus, come quickly, and all God's people said.
Amen.
Yes. But, it's been a while. And so there's a good chance we're going to die. And so we're going to talk about this life insurance and whether or not we really need it. And so that's going to be great. But before, we're going to go talk about one of my favorite parts of every episode of the podcast. You know what time that is. Let's go.
Now it's time to get caught up with our current money events.
The Monday Money Tip Podcast is sponsored by the Fully Funded Life Membership Program. The Fully Funded Life Membership Program provides all you need to begin winning with money and live a fully funded life. Fully Funded Life includes 4 key components: courses, challenges, coaching, and community. Courses provide financial education. Challenges help you make massive progress in a specific money skill. Coaching is provided by the Fully Funded Life Certified Coaches through open office hours held multiple times each month. All of the courses, challenges, and coaching results in an outstanding community that help equip, motivate, and encourage you to take your next financial steps toward your fully funded life. Fully Funded Life, courses, challenges, coaching, community. All that's missing is you. Learn more and receive a special offer for Monday Money Tip listeners today at fullyfunded.life/MMT. That's www.fullyfunded.life/MMT. Awesome. And so for today's current money events section, are you going to sing with me? One day I'd like you to sing with me for this.
I didn't realize
You
that
wanna go?
was in the job
Let's go.
description.
Current money events section.
I like singing, but
We'll
not,
have to practice.
not in front of people.
We'll have to practice. I'm not singing. I'm pretending I'm not singing in front of people. But today I want to talk about spring cleaning time. Have you done some spring cleaning?
Yes, I need to do lots of spring cleaning.
Yeah. There's something very therapeutic about it. Usually it starts happening, when you get that most gorgeous, glorious break in the weather. The sun is shining, the winds are calm. And for some reason we have this urge to open up all the windows in the house, open up the garage if you have one, the barn door, and drag everything out. And then have this certain process of determining what gets put back in the house and in what order.
Yes.
It's kind of an unwritten process, but it seems to me there's like this conversation that happened before I got involved because Jen Sangle has clear rules on what gets put back in the house.
Yeah, I'm the nostalgic keeper in our family.
Is that that's what they call that? That's what I
Nostalgic.
am.
Yeah. So my mom brings me everything that she wants to keep but doesn't want to keep at her house and knows if she gives it to my sister, it would get thrown away. And so, but there's this one part of the year, usually around spring cleaning, when I feel like the urge to get rid of things.
Yes.
So I have to optimize on it.
So while you have that feeling, but not during the daytime, I think this is kind of a once it's dark type thing. You should have spring cleaning time to clean up that money house. That's my current, right now relevant, current money events section that I'm talking about. So let's talk about what spring cleaning time looks like when you clean up that money house. So you're driving, you're thinking about, my money stuff, it's a little disorganized. Let's talk about things you could focus on. One thing you could do is file paperwork that's been piling up. There's a good chance you've got insurance documents, you've got bank statements, you've got investing documents, you've got, random stuff that's important. They say it is to keep.
Yeah.
And you can file that paperwork. Now, some people, they have adapted totally digitally. And so you can scan it in. And that could be a way you could do it. You scan your documents and then shred the physical copies. But you still need to file them so you can find them one day. So whether you're filing them in a real file folder or you're scanning them in and doing that digitally, that helps you be organized, cleaning up that money house. You can also organize your investment documents. Those things that they send you once a quarter for your retirement plan that you never open, that you throw in the pile.
Keep in the envelope.
Yeah. Open them up and actually look at them, see how you did, and then put them in the 3-ring binder or scan them in. Another thing is to organize your health insurance explanation of benefits, your EOBs, and your bills. Just get those things organized. And I kind of keep them by person in our household. So there's the Joe Sangle file folder. There's the Jen Sangle file folder. There's one for each of the 3 kids. You just have them. And this is really important, especially if you moved around. I moved around early in my career. And you have different providers and different doctors in different states even. You want to make sure that you have access to all the records, immunizations, surgeries you may have had, things like that, procedures, so that you can recall when it happened, the day it happened. And then it's also a good time as you're doing the spring cleaning to update your major passwords file. So we all have one of these now.
It constantly grows.
I have a 90-page document that has passwords. 89 of those pages may be worthless, but I'm not deleting anything. And so that I updated my major passwords file and again, made sure that Jen Sangle knew where it was. She knows, maybe the password to it, hopefully
maybe.
She remembers it.
If you trust
her.
Right.
But, those major passwords files are really important. We're talking in this episode about life insurance. If you're cashing in life insurance, that means
can't really
somebody
ask them.
passed away and you can't really ask them. And then it's also a good time to pull up that annual Social Security statement. So it's after tax season, so they've updated it with your earnings from last year. It allows you to take a look at that and see if that is clear. We've talked about that before, and it's really simple. Go to ssa.gov, and it's a very, very helpful thing. So that's 6 things you can do spring cleaning time to clean up that money house.
I'm going to add one.
Okay, Megan's going to add one.
Number 7.
She has to sing, though. You have to sing. Joe, I have a current money event. Are you going to do it?
Maybe episode 300.
Okay.
Something to look forward to.
300.
I think it could be a great time to look at all the subscriptions that you have.
Ooh.
And figure out which ones need to go and which ones need to stay. Some of them you can save money if you do annual, but a lot of times it's easier to not look at them and not remember which ones you have. Jordan and I actually just had this conversation of okay, what all do we have? Let's look at it. Do we need that? Do we not need that? So going through all those, this could be a great time while you're spring cleaning your money to figure out, hey, do I need this subscription? Do I use this subscription? Can I get away without this subscription?
Yeah,
So,
that's awesome.
Great time.
Very good. Thank you for sharing that. And so that's
You are
it.
welcome.
And guys, you heard it here first, guys and gals. 154 episodes from now.
Oh my gosh.
Megan's going to be singing. Current money events section. The end.
The
All
end.
right.
And there you go. All right. Our success story this week is from Linda, and she wrote in to say, we are debt-free, no payments for our home or cars or anything. We used credit cards, but not to carry a balance. We pay them in full each month. We are retired and building up our retirement accounts. Woohoo, we are debt-free.
That is awesome.
Yeah.
So Linda, thank you so much. As we always share, this podcast is powered and fueled by your success. And Linda, there's several things to point out. They're debt-free on
huge.
everything.
Yeah, that's huge.
And they are retired. So that is the goal of every single person that I've met, really, is to be able to retire well. And this is really a huge way to make sure you retire well, is to have no debt going into retirement.
Yeah.
Now, one of the other things that is interesting, they say we are retired and building up our retirement accounts, which means they are in surplus mode. Not only do they have enough to meet their daily obligations, they have abundance. How awesome is that?
Yeah.
So that's so powerful. So I love it because for all of the individuals listening to the podcast who are still working, this is proof that what you're working for that may seem mythical when you're in your 30s and 40s or 20s is reality for others. And so what you think is mythical, what you think may be a stretch to achieve, Linda, and she's saying we, so there must be someone else, there must be a he.
Linda and
so
spouse.
Linda and unnamed other individual are retired and they're building up their retirement accounts. And let me tell you, I bet you they're both loving it. And if they had the choice of going and getting a big pile of debt and barely being able to make it, pretty sure they would choose this way.
Yeah.
And so, hey, I love this because the unanswered question is, what did Linda and them do? What did they do that helped them get there? Maybe we could get them to share some of that with us, and so that we could say, hey, these are the keys to success for Linda.
Yeah,
That's
good.
awesome. Thanks for writing that, Linda. We're
Yes.
so grateful. Congratulations.
Yes, congratulations for sure. All right, our question for this episode is, I'm 36 with a husband and 2 children, ages 5 and 8. I'm a stay-at-home mom. Do I need life insurance?
This is an excellent question.
It is.
Yeah, excellent. So,
The end.
the end. This is an excellent question.
Significant pause.
Yeah, significant pause. I
let it
decided
sink in.
I'm embracing awkward pauses in this episode. We just did it again. So let's talk for a minute about what insurance is really about. We're having too much fun today. But what does insurance really do? Like, what does it really do? Seriously, I'm asking you, podcast listener, what does insurance, any type of insurance, what is it there for? What does it really exist for, to accomplish? What does it do? Mm-hmm. Well, what does it do? Share with everyone, Megan.
Yeah,
You
so
know.
I do know. Insurance transfers financial risk.
That's what it does.
Yeah.
So it transfers financial risk. Now it doesn't transfer all risk, but it does transfer the financial aspect of the risk. For example, when you drive your car around, there is a good chance for it to run into something or someone else. And when this happens, it incurs cost, repairs to the damaged personal property, and potentially personal injuries. And insurance allows you to transfer the financial risk to the insurance company.
Yeah, it's not like you wake up that day and think, today I'm going to get in a car accident. Like, nobody does that.
No one.
And so the chances are it's going to happen unexpected.
100%.
So, hence having insurance.
Yes. And you use the word hence, which is awesome. So henceforth, forevermore, you should have certain insurances. And insurance, because it allows you to transfer the financial risk to the insurance company, well, most months, of course, they love that. The insurance company loves it because most months you don't have accidents
Thankfully.
or incur costs to the insurance company.
Yeah.
So for many people, they've driven for decades without incident. When's the last time you had a car accident?
Ooh, it was about
That costs money.
It was about 2 years ago. A lady backed into us at Dick's. We
Okay.
were leaving Dick's Sporting Goods.
Yep.
She just wasn't paying attention and backed right into us.
So boring.
Yeah.
It's
It
horrible.
wasn't. I wouldn't say it was boring. I mean, I was like 7 months
I
pregnant.
thought you were going to talk about you were on 2 wheels and there was a tumble. Car went 7 times. No.
Like I said, you can't control your
truth
accidents.
Is, you don't know when it happens, and you're in a parking lot.
Yes. This
And here comes your car getting
should be a
crinkled.
safe place.
Yeah. So anyhow, that's how most insurance. Most accidents are not the sensational. They're the everyday. I remember distinctly my first accident. So it's the first and only accident that I was in, and that was my fault. And it was in a right-hand yield where most people had to stop, but the right-hand turn was a yield. You just yield to oncoming traffic. And the person in front of me, in my mind, had stopped, kind of made sure it was clear and started moving. So I had checked them out in my mind that they were gone. So I'm looking back over my shoulder, and I just kept proceeding forward until I ran into the rear of them. Anyhow, for most months, you don't incur an accident or cost. And for many people, they've went for decades without the incident. Yet every month they faithfully paid that insurance premium because they just can't afford the risk of having an accident that costs $357,530 and pay all those costs out of pocket. And that is cheap for some horrible accidents.
Wild.
So let's get back to the actual question. Should this lady, mother of 2, husband of 1, she has 1 husband, wife of 1 husband, working a non-paying job as a homemaker, should she have life insurance? And the answer is found in the first question. What does insurance really do? It transfers financial risk. So if we refine the question in that phrase, does it pose financial risk to the family if Betty, as we are going to name her, if she dies prematurely? So if this mom, Betty, dies prematurely, of course it's horrible, it's tragic, and the absolute worst, and it's difficult to think about or imagine. But suppose Betty departs life early and has those two beautiful babies still in the home, 5 and 8.
Yeah.
Would it cost money to replace all of the stuff that Betty normally does on a daily basis?
Oh, yeah.
Yeah.
Yep.
Like when we think about what moms do, right? Let's do some things here. It's like she's a stay-at-home mom. So does she provide daily child care?
Yes.
If she's not there, would husband have to pay for daily child care?
Yes.
Most likely,
Yeah.
yes. That costs money, a lot of money.
It does.
House cleaning.
Time consuming.
Let's say Betty does the majority of the house cleaning. Does that cost money?
Yes.
Laundry. Does that cost money?
I feel like I'm always doing laundry.
Schedule planning. Does that cost money?
Yes.
Right? Being a taxi cab driver to get the kids to the next thing. Yes. Grocery shopping, meal prep, PTO meetings, parent-teacher conferences, child advocacy. Do you see the financial risk? They say the average domestic engineer, which is another name for a home,
Yes.
Stay-at-home parent, is like $100,000 a year to replace what they do. And so if you're a stay-at-home parent and you're listening to this podcast, you need to ask for a raise. So there's financial risk. And so let's go back to our question. What was the question I asked?
The question is there a financial risk to the family if Betty dies prematurely?
And the answer is?
Yes, 150%. Yes.
150%.
I upped your 100%.
Yes. So therefore, the answer to Betty's question is I'm going to let Megan answer, should or should not have life insurance. Betty should
Have life insurance.
have life insurance.
100%.
So should her husband. So then the next question becomes, what type of life insurance and how much life insurance? So let's go to where we're at right now in this episode. You know, we don't know when Betty's going to pass away. We pray that it's at 99 and she's lived a full life, right?
Yeah.
But the reason we have life insurance is to transfer the financial risk should she pass away while these children are still in the home and while it poses financial risk if she departs life early. And so we've answered that question. Yes, she should have life insurance. So should her husband. Both of them should have life insurance. But the immediate follow-up questions are, what type of life insurance and how much life insurance? So here are the I was broke, now I'm not / fully funded life answers. Are you ready? So they should have level term life insurance. And I recommend for this family, 30-year level term life insurance. Now, let me explain what level term life insurance means. It means that it is for a term, in this case, 30 years. Now, I didn't choose 30 years randomly. So their kids are 5 and 8 right now. If Betty takes our advice and immediately gets life insurance, 30 years from now, how old will the 5 and 8-year-old be?
Yeah, they'll be out of the house. They'll be good to go.
They'll be 35 and 38.
Ideally on their own.
So they will be on their own. Okay. So will there be financial risk like childcare costs, like all those things? All those risks are now gone.
Yeah.
Okay. And 30 years from now, if Betty and her husband have applied what we've taught, are they in the same place financially or are they in a much better place?
Much better.
Much better.
So why couldn't they do like 20 years?
Yeah.
Because they would be out of the house.
So one of the reasons I said 30 years, because I reached out to them and they don't know for sure that they're done adding to their family.
Ooh.
And so because of that, 30 years makes more sense.
That's a good point.
Okay. So that's one big reason why. So, you know, she's 36. So 30 years from now will be 66. And that's the other reason it takes them all the way right up to retirement. So it allows them to transfer risk all the way to retirement. And 30-year level term life insurance is very cheap when you're in your 30s. Turns out most insurance companies are willing to take that risk because they believe you're going to live, well past that.
So at the end of that 30, they'd have to re-up.
So level term life insurance expires at the end of the term. It's over. There's no cash value buildup. It's not like whole life insurance. And so I know there's other types of insurance like whole or cash value life insurance. It literally costs, term life insurance for the same amount of coverage is like 3 to 5% of the cost of whole life insurance of the same face value.
Yeah.
3 to 5%. So where do the other 95% go? Well, a little bit of it goes into the building the cash value, but that starts several years after you get the policy. You would do much better to buy the term life insurance policy and invest that 95 cents extra per dollar into your own investments. Okay? And so 30-year level term life insurance, and they can re-up again 10 years from now to a new 30-year policy and dump this policy. The other thing that I would say when they say, so that's a type of insurance. Now, if you have whole life cash value insurance and it's already paid up, hey, keep it. That's great. But for me, and you would never want to have a time where you don't have life insurance. So if you have a whole cash value permanent insurance, and you're like, hey, I really like this idea of getting 30-year term. I can do that. Yeah, I don't have health issues that prevent me from getting it. Don't cancel one without having the other in place. It's really important. So we've answered the question, should Betty have life insurance? Yes. And then the next question is, what type of life insurance? We recommend level term life insurance until all of the kids and the financial risk is removed. In this case, 30 years. And then the next question is, how much? So how much, Megan, life insurance should they have?
Yes. So we recommend 10 times your annual income your take-home pay.
Right.
Or
$500,000
for non-income producers.
There we go. So if you produce income, so I want podcast listeners, I want you to hear this. If you produce income, think about your take-home pay per paycheck, per month, or per year, whatever you know it, and get it to an annual amount. So if you net home $2,500 a month, that's $30,000 a year. Add a zero to it. That's 10 times your take-home pay. That's $300,000. Does that make sense? Okay. If you have $100,000 a year, then you need $1 million policy. If you are a non-income producer, I used to say $250,000. I like $500,000 now for two reasons. One is costs have went way up.
It's expensive.
And number two, the interest you can gain on dollars is way less. And so I want to make sure that you have enough, because ultimately, why do we have this life insurance? It's so that those that we love are able to focus on grieving and not having to focus on how do we pay the payments and keep our house and keep things together.
Yeah.
Because I've met so many people who have went through this horrible, tragic scenario. And they have lost their spouse while they had minor children in the house, and their spouse did not have life insurance. And I've looked utter poverty in the eyes, and I don't want that to happen to anyone. And it's so simple and so cheap to be able to get this. So I just ultimately would say this: the best way to determine if you need life insurance is to answer this question. And we'll list this in the show notes. Are others reliant upon you to produce income or to perform wildly important work that would otherwise have to be paid for? If the answer is yes to either of those two parts of that question, they're relying upon you to produce income, to put food on the table, pay rent, pay the mortgage, pay, for living expenses, or they're dependent upon you to perform wildly important work, like providing care to your children, that would otherwise have to be paid for, then you need life insurance. And then we may dive into this in more deeply in other episodes, but when does one no longer need life insurance? Well, I would say this: when they have no one who is dependent upon their income or work that would need to be paid for, or when they become independently wealthy. However, it can still be a way to leave a larger inheritance or substantial financial gifts. So if you still have years left on your policy and you're like, hey, we're self-insured now, keep the policy, because if you do die prematurely, which we're rooting against,
yes,
you would be able to leave a larger inheritance, setting up your children's children with an amazing inheritance. And so that's it for the We're All Gonna Die, Some of My Life Insurance episode. What would you add to that?
We did an entire episode on the difference between whole and term. So we get that question a lot. You briefly mentioned it, but a lot of people ask that question, or I already have whole, or should I get whole? It makes more, like they think it makes more sense, or, what's your opinions? And so I'll definitely link that in the show notes if you have questions about the difference between those, or if you have one and want to know about the other one. It's really helpful and informative. So I'll definitely link that. But I would just say, like, don't wait. If you don't have it, don't wait. Make sure you go out and get that. If you have questions about it, if your situation, you're not sure how to navigate that, feel free to let us know, email us in. We'd love to help answer any of those questions for you guys.
That's awesome.
Yep.
And so the quote of the day is from me, and it is this: your emergency fund is a form of insurance. So I just wanted to bring that to mind again on why we emphasize rung 2 and rung 5 of the ladder of building that emergency fund, because what does it do? It transfers financial risk. The risk of what, Joe? Of incurring debt.
Yeah.
And so when you have an emergency fund, it allows you to avoid future debt. And that is a powerful thing. And so tell everybody what we're going to talk about in the next episode.
Yes. So we did an episode a little while ago about how to teach your kids about money, how to talk to them about budgeting and saving, all that kind of stuff. So now we're going to do an episode on how to teach your kids about debt. Ooh. So how do you have that conversation? How should you navigate that? What should you tell your kids? How do you bring them in that conversation? So it's going to be a great episode. So if you have kids or know someone that does, make sure to tune in.
There you go. And I can't wait to talk about this. I like this. So you're going to see a theme through the course of this year where we're going to have some episodes on, how to teach your kids about ... And so if you guys have something you want to hear us talk about specifically on training up kids, on being wise money managers, being wise with money, being great with money, well, then reach out to us, contact us. Of course, if you like this episode, we would love for you to leave us a rating and review. If you're watching this on YouTube, you can see that it's a little scaled down in production value today. Our producer, our super duper producer, is out ill today. And so, but we would love for you to leave a comment if you disagree wholeheartedly about something that we said, or if you agree with it, or if something was helpful, leave a comment. That gets it more exposure. YouTube and the Google algorithms helps us. Hit the subscribe button and the little bell. If you hit that, it'll notify you every Monday when the new episode is released. We love being able to get this stuff to you. We're powered by your success stories. Share those with us as well on social media or by emailing it to info@iwbnin.com. So with that said, it's Monday. Go do one thing today. And if you don't have life insurance and you need it, make that one thing getting a life insurance quote. We'll have links on how to do that on the podcast and in the show notes. So you can do that. Do that today. And we'll see you next Monday right here with another episode of the Monday Money Tip. Get fired up.
Thanks so much for listening to this episode of the Monday Money Tip Podcast, presented by I Was Broke, Now I'm Not. If you enjoyed today's episode, please leave a review and subscribe. And for more great content and to stay up to date, visit iwbnin.com. We'll catch you next time.